What is going on, everybody? And in this video, we are providing state of the market and stock picks for June 3rd, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead. And we are coming into the last day of a short week. We had one very nice rally. I've actually expected us to have this rally yesterday, but if it wasn't for that news that we got from the Bank of Canada, we would have potentially broken over the 50 yesterday. But we did officially break the 20, and something I talk about. If you break the 20, typically, and if it's close enough, you'll get a test of the 50, you get a retest of the 20, and then you'll break up. So we did officially get that. And today, the only reason, again, we sold off today, Microsoft actually guided down today by a lot. And then Microsoft actually took a nosedive. It brought the rest of the market down. But Tesla held its own, and Tesla had a huge day. In turn, it started bringing Amazon, Google back up. Everything started pushing. The banks started looking good and started pushing as well. So ultimately, what we are really looking at tomorrow, we do have non-farm payrolls coming out tomorrow at 8:30 Eastern Standard Time. Again, these don't typically bother me. I don't really care. But in my opinion, I think because of the way events set up, and this is something I try to teach everybody as well on my channel, is the fact that certain events will have more weight than other events. Non-farm payroll doesn't typically have a lot of weight, but considering what came out with Canada, and they're looking at another 100-point basis move tacked on to their 50-point basis move, I think at that point, right, you have to start looking at other events. Well, what's going to get us info until we get into the next Fed meeting? And one of the biggest points of that being is non-farm payroll. Are we continuing to grow? That's what matters. If we are continuing to grow, then we can continue up. We can not go into recession. That's something that's been talked about and been a headline, which is helping this market push, is the fact that we won't go into recession. The Fed, I believe, came out yesterday. It was and talked about that we're not going into a recession. And then we have to actually have 2 bad quarters to be able to see that. So we're still waiting on that data to determine if we're actually officially in a recession. Again, you won't know officially until after the fact. So being said, when you're looking at the markets, again, if we can break above that 4183, if we break above this 4183 tomorrow, we are in a very strong position to really start to rally at this point. Now you have to understand too, we've been floating around this 20 EMA monthly, right? It took us a whole month to break and then only come back to gain like 12 cents on the whole month. So we were positive, I think, on the month for like 12 cents. Nonetheless, we could rattle around here longer. It really just depends. I don't like the fact that the market is hesitant in staying around this 20 EMA daily, something I've been talking about for a while. But I think we're pretty clean, right? We got that 20 break, got the tag at the 50, retag at the 20. Normally, now we should get a pretty clean break on this tomorrow. If we do get a clean break, we could get a very strong push up tomorrow to 42.80. And we could potentially start really reversing this. This is a very hard ceiling right here to break. We are trying to break it. Again, a lot of no news is good news. And then the no news is good news thing helps fuel the design of the market in the fact that the market goes up. So if there's no news, that's good news. The market, again, by design, will continue to go up. And so now we're starting to see that. Now, we do have midterm elections as well coming into the fall. So normally you get a lot of volatility and stuff going on in the market. So this is typically normal in midterm seasons as well. But more so just because of the fact that we've been trying to price in what the Fed is doing. Again, if there's anything talked about or whispered about 75-point basis move or 100-point basis move, you can believe that we're going to correct quickly. You're going to get these quick sell-offs. If not, again, I think we're going to slowly start grinding up. I think we'll start getting ready for our earnings next quarter. We still got a whole month to kind of get through before that really happens, before we start that whole process again. But you have to understand that these pre-earnings run-ups, they're going to consider, like, this was a pre-earnings run-up and you didn't have earnings till actually like over this way, and then you had the massive sell-off. So you have to understand that whatever push we're getting here could potentially be the pre-earnings run-up. Unless we get bad news, then we'll sell off. Aside from that, we'll have to see. The fact that Microsoft is guiding down, it's the market is becoming numb to a lot of this stuff. They're already well aware that things are bad. Again, so it's just more so adjusting. The market's already adjusted, right? That sticker shock is worn off. So once the sticker shock wears off, we continue to go by design. Being said, if we do break above this tomorrow, we could have a potentially big day tomorrow. Again, remember, it's a short week. There's not a lot of volume as far as institutions are concerned. So you also have to remember that when institutions come back next Monday, they could outright just correct this thing back down quickly. And they've done it before. They're short weeks, especially around this time in low volume. You have to understand that they come in quick and we'll short it back down to where they believe it should be. Now, if they believe if we break above this and run up tomorrow, if they believe we should be at 4181, we'll be at 4181. That's still holding 50 EMA daily. We're still nicely above the 20 EMA. That was the most concerning thing, was that we reclaim this. Again, I don't like the fact that we keep sitting around here. We need to move out of here and start ripping back up, potentially. Again, and if this was the bottom, we came close, right? I talked about this potential area that we should have been buying around this area. I bought a couple different times. I ran it up again, but I will typically run it into support, and at that point I will cut it and wait for it to break above, and then I'll re-enter and push it up because of these massive rejections that we're getting. And you have to be mindful of that, right? If you're 5-10 years down the road, right? If that's the view you're looking at, then you just hold these and you do that. If that's the way you want to play the game, I am more a swing trader and an intraday trader. So typically I'll write it into major support, and then I'll cut it, and then I'll wait for the break, and then I'll re-enter at that point. So nonetheless, this is what we have here for SPX. So we're really watching that level. It wouldn't actually surprise me if we rejected off this and played this range just going into tomorrow. But there was a lot of steam today, which was good to see. But again, we have to see where we land. It's something I've been talking about. It really just depends where we land in the morning. Bitcoin holding very well, try to reclaiming that 30K. I think, again, if the market really starts to rip, it would be nice if Bitcoin could get above that 32 mark. If it does, we can get a nice ride back up to that 35 and then potentially start reversing this whole thing. I think the market's in a position to where it could full reversal for the most part. That's not to say you're going to have pullbacks. Pullbacks are normal. Don't freak out. The next pullback is not going to be a flush, I don't think, unless there's some new news for things to flush. So just be mindful of that. Again, anything can go to zero, and right, the market can limit up and it can limit down just as easy. Just be mindful of that. Just be aware of the events that are going on. It's a tremendous help when you are playing the markets. If you're not aware of the events, you are going to be left behind and you're going to get sideswiped. So just be mindful of that. Nonetheless, I like where Bitcoin's at. Again, still holding this 30K, or roughly around this 30K, 30 or 28 mark has been essentially kind of that base we've been trying to establish, trying to understand what the new base is. So this could potentially be it. Again, time will tell if that's true or not. Tesla, a massive day for Tesla. Now, the key is for this is it going to hold? Are we going to hold this above? Are we going to break above this 760 tomorrow? If we can open above that tomorrow, we could start breaking out of this trend and start pushing up. Or again, we could reject and start coming right back down and potentially hit this base again around the 625 again. We find ourselves in these positions every single time, and majority of the time, any kind of technical hasn't really been playing out, especially when it's any kind of breakout. A lot of times we've seen this breakout, and then it pumps only to get shorted pretty heavily, and then breaks it back down into what the original channel was, or any kind of breakout if it's a wedge or whatever the case is. So you have to be very careful on these things and thinking that it's just going to go skyrocket. That's why a lot of stuff has been intraday, especially for me, for a while. A good strong majority of this year has been nothing but intraday. I have had some overnight swings, but it's been very few and far in between, only because the catalyst has to be there. This isn't just buy the dip and then it goes up. There has to be a catalyst there, and you have to understand this is the way markets regularly work. You have to understand what the sentiment of the market is and where the catalyst is, what upcoming events are. Right? You have general global events, and then you have individual company events that can help push these things. So being mindful of those, and that's why I always say you need to pick just a handful of good stocks that you like to trade, not anybody else, that you like to trade. Know the events that are coming up, know specific things about that particular company. It can help you tremendously in your investing, in your swinging, your trading, whatever you're doing. That is to not be so diverse. You're too diverse, then again, you're too spread out and you can't keep track of events. Again, not financial advice, just my opinion and my observation. Now, Tesla, again, watching that break tomorrow. Again, the market in general needs to break out of that level, so we're really watching that. Google, everything is coming into support, so we could get another potential pop up to the 2400. Could get a strong rejection off that. Again, it hasn't retested the 50 in a while, so more likely you're going to get a strong rejection off that. How much of rejection is the general market going to have? And I keep forgetting, let me jump down to the banks, because this is important and something we need to be looking at least for the short term. Again, banks won't always lead, but right now the banks have the most weight out of anything right now, again, because of rates. When things normalize a bit, the banks do always carry weight, but not as much as it does right now. And today we had that pullback and we bounced straight off the 50. Now, typically in this setup, you're going to get a nice push. And I think we could potentially get tomorrow could be a huge day to the upside, especially if we get banks value in tech, where if you get all the sectors pushing at once, it's going to be a massive day. And it's looking like could potentially be tomorrow. Again, anything can change. The sentiment can change overnight very easily in this market, and always can. It doesn't matter what market you're in, it can always change. So this is why you should always expect things. It doesn't matter if it's Tesla can go to zero, because something can change overnight. So this is why you have to be mindful of these things. Realize how much you're risking in any position that you take. So JPM, again, I really like where it's sitting at right now. Banks in general, so you look at GS, same thing. We're getting all the same setups. As long as it holds the 50 on the daily, I think it's good. Bank of America retested. It's holding. This one's kind of struggling here. Definitely don't want this to break down below, because like I just stated about breakouts, we're getting these breakouts, and then the next thing you find out, they flush and break back into these channels, and we're trying to avoid that. Again, the market has not been playing technicals. This is why I'm not a huge technical or these patterns. I'm not a huge pattern player. I really don't like patterns. This year has really proven that, and this is why I always go with those couple EMAs that I have, and then I purely supply and demand and events. Those are the couple things that you need to master, and I think if you can master those three things, and again, even with the EMAs, I don't really like the EMAs. Anything below 1 hour, I don't like. Even the 1 hour is kind of it's okay as long as it's a quick scalp, but ultimately the higher time frames on the EMAs are the best plan of action there. Again, so the bank's looking good so far. We have to see if this does play out. Again, where we land matters tomorrow. Always keep an eye on the banks and see where they're at. Let's look at some value here. It looks like Walmart is trying to push back up. Again, we got some headroom. I like the fact that value is starting to look decent here. Um, Walmart could be a play. I don't play Walmart, so a lot of these I don't go over. I don't talk about technicals. If that's something you want me to talk more about, or you have specific tickers, you can leave them in the comments if you want me to do that, or if you want me to do a live on Fridays, or not Fridays, but possibly like on Sunday nights or something. I could probably go over some tickers. If you want me to do a live event to be able to go over charts and stuff, I can do that. Targets, another big one. Again, it's set up high or low. It's what you want to see. It's kind of hoping for the general market to look like this, but we really need to push up. Again, these things haven't touched the 20 EMAs, and you have to be very mindful. This thing isn't just going to gap fill. As soon as it touches that EMA, it's going to get a hard rejection. So just be mindful that value is kind of setting up for that hard rejection. So that is coming down the pipe. But again, we got a pretty clean shot. I mean, it's still so from 62. So for even for target, that's a huge pop, and I think we could get a nice fueling sediment to the upside tomorrow. Google or Amazon's got a little bit of space here. Again, I think could help fuel a little bit of a pop tomorrow. We are on the 50. We did get rejected the first time we touched it. Now we're trying to push up over it. It could easily break this. If this does get back above, really want it above the 52. So we could be potentially looking at Monday. Amazon could be a huge setup play here. You get a strong gap fill actually from here, from the 2583 to potentially this 2700, which is a huge 200-point gap, which you could get very strongly if we can open above this. This might be on watch coming into next week. Again, depending on how we close tomorrow, if we can gap above some of the stuff, or potentially that's too big of a gap currently right now, but keep an eye on this key level. If we do get above it tomorrow or Monday, possibly even Tuesday, this could really start going as far as a full reversal. You get some of these bigger techs starting to reverse. You get the banks pushing, you get value pushing. We could have massive green up days coming soon. Again, you just have to be patient. If you've been accumulating for long-term investments, it'll start paying out the next couple of weeks. You'll get a nice rally. And then also remember, when you start getting these rallies, that either one, you take profits or you place stops in. It's just my opinion. I don't like to lose, give back any money that I've gained. So like putting in stops, read about stops and how to do that on whatever brokerage you're with. I think at this point, when you start getting these massive gains, I think we'll be strong into the end of the year as well. In my opinion, I think we're kind of shaking everything out. So as long as the Fed doesn't make any more dramatic moves, I think we're good. I think we're kind of solid in what we foresee coming out of the Fed from this point. We believe that the Fed has grasp on inflation for the most part. So it's just kind of gauging that, and then going from that point and making sure that they don't, backtrack and start saying, 75 points, 100 points. I mean, they can let off the gas with the rate raises and start saying, well, we're only doing 25, or we're not doing any kind of rate raise this cycle, right, or this quarter or this meeting. That could be big for the markets. And cause us to really start ripping at that point. It means that the training wheels are off and the market's pretty much back to a normal market where it can sustain itself. And that's what we're looking for. Inflation's in check. So that's what we're aiming for here. And I think it could potentially happen by the end of the year. And then you got midterms. And once all that stuff is sorted out, we could get a nice run towards the end of the year. So I think we could have potentially hit bottom these past couple of weeks. Again, I've been talking about that. If you're looking more long term, then you're pretty easy peasy from that point. Again, for me, looking for playing supports, and then we'll re-enter during certain parts until we find a new base, right? Because eventually we're going to get to the point where we're not just going to keep going up. We're going to pull back, we'll base, and we'll push base, and then we'll start that cycle of earnings where we get the pre-earnings run, and then we'll sell off for a couple of weeks type thing. So it's just getting used to the pattern. So I know I kind of ranted mostly here. That's kind of really what I'm watching tomorrow. Again, I'm really just been focusing 100% on the index. Index is always a great play when you get overall general market sentiment push. And then if it starts cycling around, say banks fall off, but not too much, but then you got tech pushing in, value pushing in, or value pushes off and tech pushes, then you still got that general strength. It's as long as they don't flush and they hold, you get that general strength that'll help push the index up. So that's why I've been enjoying playing the index more so lately as opposed to individual stocks. Some individuals are doing really well. It just depends on what news that stock had, like the news today about Microsoft. If I would have thought about it, I had that news before market actually opened. The market ripped up, or Microsoft ripped up, and then it flushed really heavy towards the end of the day. As you can see here, or towards the morning, it had that pop, and then it flushed really heavy today, and then right back like nothing ever happened. So they're just things to keep in mind moving forward. But that's pretty much it. If you made it this far, I appreciate you. I didn't make this video too long, but just trying to get some general information out there just about the general market sentiment. So nonetheless, go ahead and drop a like button. Until next time, I'll see you guys later.